Hey everybody, it's Brian Shannon from alphatrends.net. Today's Friday. It's the fourth day of December 2015, and let's take a look at this market. The S&P 500 finished with a gain of 3 basis points, but it was a very volatile week, of course, obviously. You can see we were up close to 2% today, which basically brought us back to break even on the week. The Russell 2000 didn't fare as well. It lost 1.5%, which is now down that same amount year to date, and oil continues its large descent. So let's take a look at some charts and make sense of all this. We'll start with oil with this daily chart. You can see here that we are down close to the lows for the year, and it's just in a horrible downtrend. This is what we're looking at here is a weekly time frame actually, and the lows that we had seen back in the summer are rapidly coming into focus once again as this market it remains in a solid downtrend, and it's the trends that pay us, and you have to determine, of course, what your time frame is. That's one of the most important things you can recognize. People will some say, well, Brian, last week we talked about this in the market. My perspective on the market changes as I get new information from the market itself. That is based on price action. My primary focus is the short to intermediate term time frame. So if I'm bullish one day when it looks like it's breaking out, like it did just on what was this Tuesday, I guess, or Wednesday, when I say we're getting bullish here and it looks like it's breaking out, I am bullish. I'm looking at that market saying it's making higher highs and higher lows. But as it breaks down below the 5-day moving average and makes a lower low after this lower high, then I change quickly to cautious. And when it breaks more important levels, I start looking at it as bearish. And then today, for instance, what we'd seen was this big rally here. So from a very short term, from an intermediate term perspective, what I was saying on Twitter this week was that basically this was more of this was becoming more of a neutral range. If you take a look at the chart that I post over this one, so basically this is one that I had posted Thursday night saying, we're in an area of potential support here that had been this level before, and it was the year-to-date volume-weighted average price. So as I had mentioned here, things can change quickly. You have to have an open mind and don't chase action. In other words, you don't want to sell short after it drops from 211 to 205 in the course of 2 days. You want to look for signs of stability to see, is it in fact at an important level, and will that important level be recognized by the market? And in this case, it was the year-to-date volume-weighted average price. So here's January 2nd of this year, which was our first day of the trading this year. And this volume-weighted average price has been important as support and resistance, and it came down to that level once again. When we look at the intraday time frame, we had also noted on Alpha Trends that it was a 61.8% retracement of the November lows where we closed at yesterday. So when you look at it and you say, okay, well, it's below a declining 5-day moving average, intermediate term needs to prove itself to us, then you say, well, but it's rallying on a shorter term time frame. So how do you participate? What do you do there? Well, if we look at today's action, these are 1-minute candles right here, and we take a look at the volume weighted average price for today only, what we see is that we gapped higher right here, and what had initially occurred in there, let's do this, let's tighten it up a little bit and go take a closer look. What happens a lot of times with these gaps in the market is we gap up, we hold below that volume weighted average price for a little bit as the initial sellers come in, and then when it takes out that high there and it happened to coincide with the pivot, then at that point the short-term trend, the daily trend, is considered in an uptrend, and it's until proven guilty. What would break that would be a break back below this low, so you can get involved long, in other words here, with a stop under the low of the day, making it for, in this case, a risk of about 45 cents. And then this market continued to rally throughout the session, holding above that volume weighted average price. And that one pullback, or the two pullbacks, one here and one there, were halted by that volume weighted average price. So that's what you have to be aware of and say, okay, I'm not going to fight this market from an intermediate term perspective unless the market tells me it's okay. In other words, if I enter for a day trade, I want to say, okay, I'm entering for a day trade. Here's where I think the market has the potential to go. I might think that it has the potential to rally up to this prior support level. So as it rallies up to that prior support level, it did back away initially, but it held above the volume weighted average price. So perhaps you sold a piece of your long here is the way to look at it. And then you raise your stop up, and then you decide at the end of the day, based on your risk parameters and your time frames, do I want to transition from a day trade to a swing trade for the intermediate term move? So that's again, so I changed my mind. That's I changed my mind a lot in the market based on what the market tells me, not based on, of course, the PE ratio or something fundamental. But this market, if we take a look at the bigger picture here, again, we held the volume weighted average price year to date. That's a good thing. We're making higher lows above a rising 50-day moving average. That's a good thing as well. And we've got this market showing that we have this little band of downtrending resistance over the last since July. And what we're seeing is we're coming up to that resistance with more frequency, and we're seeing higher lows. So we're getting more, the buyers are getting more aggressive time wise and price wise. So this market is looking more bullish. In other words, we've seen a large pullback in here, which had the potential to, fail and then, enter a bear market. That didn't happen. So down here, I was cautious about the longer term time frame, but as it started to rally, you have to change your mind based on what the market tells you, not based on what you think the PE ratio is or what the Fed is going to do. By the way, speaking of the Fed, everyone's pretty much in agreement that they're going to raise rates in December, December 16th, I think. But the old thing that I remember growing up is that it's three steps in a stumble, meaning that the market typically stumbles not after the first rate hike or the second rate hike, but the third. So I don't know if that's going to maintain true again this time. I know that I will take my cues from the market, not from a little phrase or some seasonality type thing. But we are in a seasonal bullish time of year, and prices confirm that more importantly. So we've got a little bit of a band of resistance from the last month right up in here. But if we back it up just a little bit further here, you can see this has been a band of resistance actually for most of this year. We first entered this range in February, and now we're back into this range. So the question is, are we going to continue to just build in here and see this volatility within the range, similar to what we had seen for several months this year within this range, or are we going to build the energy and break out? If I was just betting on it, I would say we're building energy for a breakout, because that which doesn't kill it with this with this pullback only makes it stronger. And we're seeing that buyers keep stepping up on these pullbacks and taking control at key levels and above key rising moving averages. So going into next week, I think the most likely scenario is that we kind of do something like this for a day or two, and then we continue to break higher. But I have a bullish bias. I think our more important level, I would be more concerned if we were to get back below 207.50 again. I think if we pull back down to there, that's okay as far as settling down from the volatility of the last couple of days. But each and every day I go through this analysis on alpha trends. So if you're looking at just once a week, keep that in mind. And I have a chat room where I talk about these trends as well, as far as where are we in relation to the volume weighted average price and what should our bias be. The Nasdaq also had a better week actually, of course, than the rest of the S&P 500. But we see here that looking at the daily chart, I've got the volume weighted average price from the beginning of the year, and from this low, and from this low. And you can see from this low, that's where we had pulled back to a week and a half ago. So this market is obviously much stronger on a relative basis to the S&P 500. And when we look at the weekly chart, this is the highest close on a weekly basis in a decade or or more. I mean, going back, at a weekly close or monthly close, if we're, to finish out the month here, this is a record close as far as the monthly time frame goes. So the uptrend remains intact. We have to be cautious when we break levels of support and say, is this going to lead to something bigger and deeper? And, no one's going to buy, or at least I'm not going to pretend that I buy right at these little pullback lows. But if I can get a nice piece of it when it begins to show us evidence that the buyers are back in control, that's what I'm personally comfortable with. Each person has to decide for themselves what their personal time frame is. So let's look at this daily chart. We have same thing here. We have this low near 110. Then we have a higher low near 112. We have more repeated tests of this resistance. It looked like maybe we were, seeing a situation where from a failed breakout would come a fast move lower, and that initially was, but the market reversed that reversal. So you've got to move with the market, or decide that you're going to be an investor, not worry about this type of volatility, and just sit back and ride out the storm. If that's your personal preference, that's what you ought to do. The Russell 2000 had, as I think I said last week, we don't want to be the people that buy this breakout past the high or the breakout beyond that volume weighted average price, because we have to ask ourselves, where has it come from? It just rallied from 114 to 120. So we don't want to be the person that buys up at that 120 level. We want to say, okay, the buyers are still in control at this point over here. And what's our definition of trend for our time frame? The higher highs and higher lows. Well, when that pattern breaks and we see lower highs and lower lows, we have to change with that and say, okay, now who's in control? So if we, kind of back all this stuff up, what we're looking at now is here's our first potential level of resistance next week. That's near that 5-day moving average as well. So I think the best scenario for the bullish case would be that we kind of go up somewhere like this and then kind of get back above that 5-day moving average and that prior support. And from there, we can then build the energy to be able to continue to move higher in the Russell 2000. The longer term time frame, we've got a 200-day moving average ahead as well. These are all things to be aware of, but again, it comes down to time frame and the definition of trend. The semiconductors had a good week once again. They gapped higher on Thursday. That gap failed very quickly, and we had seen what was looking like what might be the beginning of a bigger reversal. And by a bigger reversal, I mean, we've had this rally here as well from 50, 52 and a half-ish up towards 56 and a half, 57. And we don't want to be the person that's the late person to the party who buys up here. We want to be buyers after pullbacks settle in. And I think that it's most likely for the semiconductors that they will pull back a little bit, kind of create some support in this zone. And if it can build in here for the next week or let's say 3-4 days, then it would be in a position where we would have a better place to say, okay, here's our most recent relevant higher low. We can get long on a break of resistance with a stop underneath that higher low. So for next week, I think the semiconductors need to settle down a little bit in here, and but otherwise it remains on the daily time frame innocent until proven guilty. The Biotechs had an interesting week. They had gotten up last week, as we know, up through that volume weighted average price year to date. And as you know, I said, we don't want to be, we want to look at it and say, okay, looks like the buyers are in control. But what do we do with that information? Do we just buy it blindly and say, okay, we're going to be a buyer right here, right on this breakout and stay bullish? Once it breaks that, gapped up and broke back down, what I was saying is it's going to need to get back above that for us to become bullish again, rather. That it was more neutral as long as it was holding this range of 331. I said this is more neutral, but if it breaks that, it's going to be bearish and most likely head down towards 320. It came almost precisely to 320. What's significant about the 320 level? Well, that's where we have that 50-day moving average. That's one thing. We have we can take a look at the volume weighted average price from this low or from this low, and you can see now that that's the volume weighted average price from the August low as well. So that adds significance to this level. So now where are we with these biotechs? I had pointed out that we had the potential that this is a bigger head and shoulders pattern, with this being the left shoulder, this being the head, and this being the right shoulder. And was this a return to the neckline that's going to lead to a bigger pullback? I don't really know. I'm not an investor, but it still has that potential. What I'm looking at on the daily time frame is we had that failed breakout right there. It pulled back to where it was supposed to find support, and so right now it adds significance to this level as a potential as support. That if it breaks below this level, then there's probably bigger trouble for the biotechs. For right now, where are we? Well, we rallied right back up to that 31.32 level. So if the biotechs are going to be able to continue to recover here, I still consider them neutral until they get above this 342. That is neutral in longer term. But if we can pull back, rally back up, and then push through this prior support and then get up through there, well, then we turn more neutral in this area and bullish as it starts to turn higher again. So it all depends on time frame. Apple this week recovered again from that volume weighted average price since the earnings report 2 quarters ago, and that's where this volume weighted average price comes in. So you can see that that is being considered an important level. For whatever reason, that is the point against which we measure and say the buyers are gaining, defending that level. We still have this as a potential bigger level of resistance. So overall in Apple, I'm not excited about it. It had a nice recovery today. That's a good thing because we had broken below important support on Wednesday into Thursday, and a nice recovery. And when you're short, especially on the short side, you've got to be quick with your stops and say, if you're short, for instance, right in here as it breaks down, initial protective stock goes below, just above that most recent lower high. And then as it breaks down further, we lower a stop once again. It breaks down further, we lower a stop. And then we move to the sidelines and say, okay, let's let this thing settle down now. So, strong stocks continue to be strong, like Amazon and Netflix, and the garbage continues to be garbage. GoPro continues to be at a place where every single person who bought this, except for a couple people under 18 today, every single public owner of this stock is losing money. Twitter is another one that just continues to be a piece of garbage. If we look at the 30 here on the daily time frame, you can see we're trading in this range here. Well, let's look at that range a little bit more carefully on a 30-minute time frame. And what do we see occurring within this range? Well, this has been really the bigger band of support in here this the last month or so. But above that, what's going on? Well, we came down to this 25 level and we bounced up to 26.5. We came back down to 25 and we rallied to 26.25. We came back down and rallied to 26. What is that telling us? It's telling us a couple things. One, the tests of support are becoming more frequent. So what does that mean? It means that the buyers that are there are likely saying, how much stock are they going to feed us here at 25? At what point do I pull the plug on my buy order? Because the pressure is building. They're coming back more frequently. And they're not waiting. That is, the sellers aren't waiting for 26.60. They're taking back control at 26.25. They're taking back control at 26. So they're getting more aggressive price-wise and time-wise. So I would be looking that maybe another rally like this that creates a lower high, and then it breaks this support, and perhaps we get a nice little panic move down towards the 22-ish level. The other scenario is if you're unsure or you're not a short seller, you just wait. Let this thing settle down. Let the buyers show that they're gaining control. This is not evidence that buyers are gaining control. This is evidence that there's pressure building here, and it's most likely that the consolidation will continue in the direction of the primary trend. The primary trend is obviously lower. Shorts keep piling into this thing, and guess what? The shorts are correct. Just having short interest does not mean that there will be a short squeeze. Short squeezes, the other than the knee-jerk short squeeze that lasts a day or two, a structural short squeeze occurs when the stock is in an uptrend and the shorts are under pressure. Anyways, this is the stuff I talk about every day at Alpha Trends. Come take a trial, take a look, and anyways, I'm going to be doing away with free trials here soon anyways. So if you want to get one in, now's your time to do it. Have a good weekend. I'll talk to you next week.